Deep Dive with David Stendhal, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey, it's David Stendhal with tonight's Deep Dive. It is July 5th, 2018, and we're going to take a look at gold, the ETF being GLD. The gold market itself has been trending to the downside here for quite some time, so short, intermediate, and long term all point to the downside, no surprise there. Here is what's taking place. There's a really good opportunity to be a little more speculative, and part of this is caused because the technical rating is flat, and the best opportunities for markets come from technical ratings that are flat. If they're really bullish or really bearish, then a lot of the time a lot of the potential has already been taken out. So anytime you see with any of these markets the sideways contraction here with the technical rating, that is a market that is poised and is setting up well for an opportunity. Now, the seasonals sometimes are going to give us a bit of a direction, as they are here on the upside. If we take a look at the deep dive and we look at some of the patterns, well, then things become a little more clear, where we have some lows that have occurred here in the doubt, the stretch, and the pulse, all for gold. So they're all kind of hammering out a potential bottom to the market. If we actually take a look at gold here, a couple things I want to show you. Here's that downtrend, which has actually been underway for quite some time. We had a nice little bounce yesterday, a little bit of a follow through, not yesterday, but the other day, and a little more follow through today. But it's butting up against resistance. So let's see how things kind of play out with this threshold of 1255.70. That's this level right here, where we're basically at that level right now. Let's see if we're actually able to break above that. That would be good for our long positions. If we take a look at a stronger resistance or support line to it, if we come all the way back through here, you can see that the lows that kind of triggered there. So we're right now in between this resistance and this support, and we're obviously butting up against this. So let's see whether or not the market is able to bounce around and really start to, after it's had a little bit of a consolidation, let's see whether or not the market's actually able to rally here. We've got the energy level, which is very, very high right now, in part because the market has been trending to the downside so much. So it's probably due for a little bit of a consolidation. But we recently had, and it's kind of hard to see here, a wave low that triggered. We've got a couple other indicators that have popped up down here. They're all pointing to the fact that the market should start to rally to the upside. We bounce back here to the website. I just want to show this to you because we were talking about the seasonal tendencies. Here's gold. It's number 3 on the top 10 list. And if we actually look at gold for the seasonal tendencies, this being a 10-year chart, you can see that I know it's contracted here and it's hard to see here, but there is a trend to the upside here through the majority of July into August and September, and then it starts to peak out in the latter part of September. So we've got a little bit of a seasonal trend to the market that is pointing to the upside, and you see this on the 5 years as well as the 20 years. So you can see that for the most part that there really is an opportunity here for the seasonal tendencies of gold to really start to pick up a little bit. Now, it's not saying that it's going to rally right away, but it is telling us that the trend and the seasonal tendencies are certainly poised for the upside. The other thing I'm going to show is more of a contrarian, that this is our UVI index, underwater volume index. And you can see that sometimes you get these little spikes to the market, quite a few of them, and we're in one of those phases right now, and typically it reverses from that. So it's more of a contrarian indicator. It hasn't reversed yet. There's a little bit of faith that goes into the interpretation here, but whenever we do have these types of surges to the downside, we often will get these little bounces, and we're in one of these phases right now where it has rallied to the downside and we're due for a bit of a bounce here. So the systems are anticipating this. And so we have one system that went long the market before the holiday. We have another that just triggered today. So we have two systems that are now currently long gold. Now they're both intraday, 240 minute, another 240 minute. Both are pattern based, but they're two separate systems, two different trading styles, if you will. And from that standpoint, we'll see as we're not they're going to be able to stay in this trade while the market goes through this bit of a bouncing consolidation, hopefully a bounce to the upside. So just keep this in mind that at least the systems right now are looking for a bit of a continuation on the bounce. When it comes to the leverage, you can see that a number of the markets are highly leveraged, but gold is just picking up with that second system having triggered. We're now at 100%. Sometimes we can go a little bit above, but at least we're at 100%. Some other markets are at 150%, and that's simply because of the fact what is normal for the systems and what is abnormal. Right now we're at a normal phase where we have two systems that are along the market. I would suspect that if the market is able to go through this little consolidation and really start to take advantage of the pop that is going to be underway here according to the seasonal tendencies, that this leverage component will start to lever up a little bit, and some of the other systems will start to trigger as well, meaning a few more of the trend-based systems will start to trigger, and we'll be able to lever this up a little bit. But right now it's at 100%, and we'll see as we're not there able to actually maintain this. It does have a tendency to bounce around in these early stages, but do watch gold here. And I just want to sort of conclude here by saying that the systems in general get an A grade, A right through here, it's in yellow, where it's one of the better markets to trade based upon the normal traditional type systems, ours included. And so from that standpoint, something to really watch here. We really want to start taking advantage of the market, and as long as we can break above and stay above on a closing basis this 1255.70 level, and as a minimum, depends upon your risk level, at least as a minimum stay above this lower level right through here, which is at 1234.10. These are the key numbers that you're going to want to be looking at, but we're probably due for a little bit of a bounce, have a little bit of a surge. It'll probably chop around quite a bit, so don't expect it to have a V bottom where it comes down and then straight back up. I would suspect that this is going to be more of a U type formation if it's actually able to pick up some steam here, but there's enough indications with a number of the indicators and the pro alerts and the systems having triggered and the seasonal tendencies. This is a market you want to start looking at if you're in a position. So we will take a look at some more markets later in the week and go from there. Thanks so much.